Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about the agrochemical sector or the agri sector and 5 picks, the best 5 picks that I bring to you from this sector for you all. So let's get started. First order disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about the sector itself, here's a small request that kindly support me on Patreon, and once you do that, help me grow the channel. Help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts that I put up from time to time, and also you get access to market calls, etc. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon, you can join me on YouTube with a YouTube membership as well. Criteria for picking up these stocks: these are established brands and strong managements into diversified yet market leaders in their space. So they are into the agrochemical or agri sector, but still they are diversified into a lot of businesses and market leaders in their own space. Low debt, virtually no pledging, and strong institutional holding is there. Solid return ratios and numbers are pretty good for these companies. How to allocate funds into these companies? Well, put no more than 10% into these stocks and probably mix and match with your other portfolio stocks. Whatever stocks that you are currently having, you can mix and match with those, and it should give smart returns over the next 3 years. And keep a 20% stop loss on these stocks. If the market really turns around, then you don't lose a lot. First pick in this list is Escorts. In my opinion, it is one of the better picks with the kind of consolidation that it is showing, and with the Japanese company getting into it, or the Japanese arm getting into it and investing so much into the company. I think there are better days ahead for the company. It is a leader in the tractor segment and gaining market share in this downturn. So it has expanded base in South India, where demand is rising at the moment, and there's great moat and longevity of the business. We've seen how this business has gone up in leaps and bounds over the last 2 decades. I think over the next few years it's only going to get better. Consistent growth is expected going forward once things normalize in the rural areas. There's rural income that has reduced recently, but over time I think things will look even better as things open up. So wait for major corrections around 1830 to 1750, good levels to accumulate the stock. Second in this list is UPL. In my opinion, it is one of the better companies. Yes, there have been management issues earlier. So this is phosphorus that I have written. So there's a spelling mistake there. It is a leader in the phosphorus intermediaries. Boast of a lot of products in the agrochem sector. There's a gamut of products that they are selling globally. Strong management and return ratios are pretty good. I remember it being a 150 crore market cap company 10 years ago. Now has become a 60,000 crore market cap company, and growing ever more. A market leader in the space, and it is a darling of large investors with consistent returns over years. It has produced very decent returns and now have become part of the Nifty. It has gained market share of smaller players, and as smaller players have moved on the wayside, UPL has been doing well. The results for the December quarter were pretty strong, and although the stock has fallen from 820 830 levels, I think around 730 740 would be good levels to accumulate the stock. Very strong support around 700 rupees. Third in this list is Mahindra and Mahindra, and one of the larger, you can say, auto plays in this segment. But many would understand that it is also into the agri, you can say, products or agri auto segment, with a lot of tractors that they sell and machinery and generators, etc. Leading player in rural four-wheelers and second best in tractors. After Escort, it has been doing extremely well. Four-wheelers sell big time in the rural areas, in the agri dominated geographies, And demand has surged with government incentives to farmers that has gone in over the last couple of years. Demand has gotten better for such kind of products like SUV cars, etc. And valuations are stretched, so buy on dips to around 660, 700. In my opinion, around 700, 720 would be better levels to get into it. I think sales will remain robust in this summer season, in this monsoon season. Remember that last two seasons have been a washout for most of the companies because of the pandemic, although it did not hit that much to the rural areas. But I think the next 2 years could be big for companies in this sector. It will be a front runner in the EV space as well. It is doing a lot of things there, so that's also a play that one can watch out for M&M. Very strong management. It will perform well over say 2 3 years. I think the performance will be even better. It is a larger company, so you have to give it a decent amount of time. Fourth in this list is a part of M&M, but a different company altogether, a listed company that is totally different. This is a purely a trade, you can say, and you can hold for 3 years. I think this is one of a very interesting company, Swaraj Engines. A small tractor play. It produces generators, it produces tractor batteries, etc., and many other products, tractor products. Diesel engines to other manufacturers produces tractor engines, more or less. It's a debt-free company with high cash reserves. There's high return ratios and decent dividend yield. Dividend yield is pretty good for the company and has been performing consistently. Remember that M&M has around 33% stake into this company, and normally it props up and does extremely well between this May to July, August, or May to August kind of period, and then goes into a long consolidation. But I believe as rural economy picks up and things really get better, I feel Swaraj Engines is going to perform extremely well. Probably it's a 1 year trade rather than a 3 year trade, and you can buy around here and sell by the end of the year with 20 30% upside. And the last in the list of the stocks is PI Industries. Now, why I brought this up, although the results have not been that great over the last few quarters, although last quarter results were decent enough, it is a leader in the agrochemical space. It has remained one of the best companies over, say, 2 3 decades in the agrochem sector. One of the, you can say, foreign dominated company here in India, gained market share in this turmoil and has been doing well. There's decent promoter and institutional holding. There's only 13% free float. There's strong, it is a strong stock. And the numbers in the September quarter were good. Numbers in the December quarter were even better and pretty strong. And although the stock is trading around 2500, the best thing is when I made this presentation, the stock was around 3000, 2900. Right now, the stock is around 2500, 2600. These are very attractive levels to get into the stock. I don't see much downside, so there's a huge margin of safety while you invest into PI industry, and that's why I brought this stock up in this list. Otherwise, there were other stocks that could have been put in, but these are very decent levels to accumulate from a 3 year point of view for PI. Some other considerations that came in, so Greaves Cotton, just because of valuations I did not put in here, but a very decent company. Bharat Rasayan again has gone up 35% from the bottom, 9500, it is at 13,000 odd. Again, Coromandel International is one of the better picks in this segment. Again, it should be bought 10 15% lower. I think Sumitomo Chemicals, with the kind of numbers that came in a day or two go 2 days ago, I think this is something to really look at. This is at reasonable levels around 418 420. It is trading at very interesting levels at the moment, so one can look at Sumitomo Chemicals out of these five companies because of the kind of results it has produced.